Hello there. We are continuing our Binary Options Academy projects, and one of the reasons, let's say, why Elliott waves or complex corrective waves are so difficult to understand by traders is because of these double and triple combinations or corrections or complex structures that price is making. Reading a tape, if you want, or reading a chart is not that easy. It's not, and not the fact that it's not that easy should scare somebody, but the fact that there are so many rules that needs to be respected, that in the end there is the risk or the jeopardy to forget something, and therefore the trading decision is wrong. However, the purpose of this mini educational series is to look at corrective waves. I would say is to look at double and triple zigzag, and we'll have two different parts. On the first part, I would like to lay down the rules of or how a double zigzag looks like, the theory and so on, and then on the third part we'll take a look at some examples. Well, first of all, a zigzag is being a corrective wave that has a five-way structure, an impulsive move. Then it has three-way structure, so this would be a wave A, then a B wave, something like this, and then a C wave to go to the downside. There are three types of zigzags. We are talking about a truncated zigzag, or a normal zigzag, or an elongated zigzag, but the most common one is the normal zigzag. Taking that into account, if you have a simple zigzag as a corrective move, then that is okay. We should go and buy then call options based on it. But if the price fails to retrace now in the move that follows, if price fails to retrace in the move that follows, it means that the market is going to form another corrective wave. And then you look at the structure of this new corrective wave to come. And if it is still a 5 and a 3 and a 5-way structure, it means that you have the second zigzag right there, and just like that, looking at the screen and at this structure, this is being called a double zigzag. How or would it have been possible, or would it be possible for the double zigzag actually to transform into a triple zigzag? Yes, of course. We'll have another intervening X wave, and then another zigzag, 5-way structure, 3-way structure, 5-way structure to come. And this whole move from the highs to the downside is being called a triple zigzag. In terms of Elliott waves, it should be labeled with letters and letters only, because letters are showing the corrective type of wave. So this should be labeled as wave A, this should be labeled as a B wave, and this is a C wave. And just like that, we have an ABC. The ABC is the zigzag, and both waves A and wave C are a 5-way structure or an impulsive move, while the B wave is mandatory not to retrace more than 61.8 when compared with the previous wave A, and is mandatory to be a corrective wave. Of course, either a triangle or another zigzag or a flat or a combination of the two. Then we have the intervening X wave. The intervening X wave is this one here, and then you have, when by the time the market goes and takes a new low here with an impulsive move, you already know that a new corrective wave started, and if this is an impulsive move, it can only be a zigzag. So we go again A and B, and then the C wave to the downside. This should be the second zigzag, and then we have a corrective wave, or a move that comes only to correct the previous correction, if you want, and that move is mandatory not to retrace again more than 61.8 when compared with this whole pattern. And by the time the lows are being broken, the market forming another 5-way structure, this should be labeled A, and the B wave, A, B, and C. this is a triple zigzag. If this would have been a double zigzag, then normally you will have only two zigzags here connecting by the x-wave. One important characteristic here is to remember that each and every corrective wave to the downside, so this one here, it is a zigzag, and whatever it's between these waves, they are only connecting waves or intervening x waves, they are being called. So how to trade this one? One of the biggest characteristics of a zigzag is the fact that they resemble impulsive activity or impulsive moves, and that they are channeling too well, and that would be a difference, or let's say something that is not happening on impulsive moves. So this would be the channel, something like this. Let me change the color for it. Let's make it another color, like this, like this. It is channeling too well, and therefore when you trade binary options and you have a triple zigzag, for example here, on a move to the downside, every time the upper side of the channel needs to be sold, or you need to buy put options on it, because corrective waves, corrections in a zigzag or a triple zigzag or a double zigzag, corrections are almost the same. So in this case, what do? We don't know this until, so you have an ABC and then you have the X wave. When these laws are being broken here, the logical thing is to wait for price to come into the upper part of the channel and then to sell there, or to buy put options there. And then when the lows in the C wave here are being taken again, to wait for price to come and then to buy put options again. Now, this is only a 4-hour chart and one currency pair. Imagine that if you are trading this one on the 5-minute chart, or if you are trading these ones on the 1-hour chart, and there are so many currency pairs that makes this pattern as being quite popular. Stay tuned on the second part. We'll try to apply everything that we've discussed here on this triple zigzag that we have to the downside, and to find places for buying put options and what would be the expiration date to expect. Thank you, and stay tuned for the second part, please.